Stephen, are you continuing with your bid for this place in spite of Senate reaction and Senate Republican reaction that doesn't look too positive in your favor?
Oh, I sure am. And in fact, this is going to be probably a 3-month process. So a lot, what the situation today, I think is going to be a lot different 3 months from now when I go before the Senate and the Banking Committee and the full Senate. So I'm not too concerned about this. I actually think if we can steer the discussion away from things I wrote 20, 25 years ago and more towards what I believe in terms of the economy and Fed policy and how to create growth and stable prices, I think I'm going to win a big majority.
Who are you targeting in terms of Senate Republicans in order to flip their vote? Because right now there are several prominent ones that just will not be interested.
Well, look, just because a senator today says they won't vote for me doesn't mean 3 months from now they won't. It's going to be a different world, 2 or 3 months from now when this comes up before the Senate. And in that time, I hope to talk to all the Republican senators. And I think the case for me is look at this booming economy. It happened in large part because of the Trump economic agenda, which is great for women, great for minorities, great for every group. And, we just got another blockbuster job labor productivity number today, which was off the charts. We're going to get another blockbuster jobs report tomorrow. So I'm going to run on, helping put Trumponomics together. And this has been a spectacular success. And when I'm at the Fed, I'm going to try to do everything I can to make sure we continue with high employment, higher wages, and strong growth.
Mr. Moore, good morning. Tom Keene in New York. Let's do a what if right now. You mentioned you'd like to talk to people. Let's talk to Paul Krugman. Let's talk to John Taylor. Tomorrow at the Hoover Institute at Stanford University, everybody will line up and speak. You're a Fed governor. You fly out to Hoover, and you've got to talk about what you call the swamp, the Federal Reserve. What do you say at Hoover tomorrow as governor about your swamp?
I'm not exactly sure. I'm not sure I understand the question.
You have called the Federal Reserve System a swamp. You've done that. I want you to pretend you're going out to Hoover tomorrow and you're speaking as governor of the Fed about the swamp. What would you say at Hoover?
I'd say, look, the most important thing for the Fed is to keep our prices stable. That leads to the highest value added to the U.S. economy. We've got to make sure that we have a stable price system, that we maintain a strong and stable dollar. And if we do that, I believe we can see, as Donald Trump does, I think we could see 4% real economic growth with no inflation, high employment for the next 4 or 5 years. There are no limits to growth. That would be my message to the folks at Hoover. I think they certainly understand that, and that we can have high growth without inflation. My mantra from the day that Donald Trump selected me for this is growth does not cause inflation.
Stephen Moore, if we fill the punch bowl to the peak, if we get half or all of the rate cut that the president demands, what will that do to dollar stability, and what will that do to price stability?
Yeah, it's a good question. So, as you know, the Fed yesterday held pat. I think I could make a case for having repealed the rate hike that took place in December. Remember, I was one of the first people, although there were many, who called that a tragic mistake. And of course, now everyone acknowledges that it was a big mistake. I would probably be in favor of repealing that rate hike, which was I think 25 basis points. I'm not so sure I agree with the White House that we should cut rates by an entire percentage point. I mean, I just don't see the case for that right now.
Mr. Moore, Guy Johnson in London. Let's talk a little bit about that productivity number that you just raised, 3.6%, well above estimates of 2.2%. Do you expect that kind of number to continue rising? You talk about a 4% kind of potential growth rate. How much higher could that number be if productivity keeps climbing?
Well, that's a great point, because as you know, productivity is one of the things that leads to higher GDP growth and an increase in output. And, that is such an amazing number. I mean, I certainly didn't expect it. I thought we'd be at about 2.5%. And by the way, this is a direct consequence of the tax cut. Now will people who are against the tax cut pay attention to what's going on in the American economy? The reason we wanted to cut business taxes and the reason we wanted to allow businesses to write off their capital expenditures immediately was to get more capital investment, which we're seeing. Capital investment leads to productivity. Productivity leads to higher wages and growth. I mean, it's just happening beautifully. I mean, we couldn't even mapped it better than this.
One of the reasons why the Fed decided to change tack back in December it was because the rest of the world was slowing down, or the data appeared to be pointing in that direction. Do you think the rest of the world is still pointing in that direction, i.e. negative right now, or do you think actually things are starting to stabilize, i.e. is that a change of kind of position right now? I think that's your phone.
Sorry, I just want to make sure I understand. You mean when you say negative, you mean their growth rates or their interest rates?
Well, the interest rates are negative, but one of the reasons why the Fed turned course was because it looks like the rest of the world was slowing down.
You mean
and
their
I'm just
economies?
wondering whether you still see that. Yeah.
Yeah. Their economies are slowing down. I'm not so sure why that would... Look, my point is that we saw falling commodity prices very sharply in the months preceding that rate hike, and I just didn't see any inflation out there. Now, my view is, look, the rest of the world is, look, the dollar is the world commodity. I mean, the world currency. What we do affects other countries. If we can keep our price system stable and make the dollar as good as gold and strong and stable, that benefits everybody in the world. It doesn't just benefit the United States. It benefits people from Africa to Europe to China and so on. So we want to keep our dollar, stable, not just for the good of the United States economy, but for all the other economies that we do business with.
Mr. Moore, there is a slight issue with the productivity gains in that unit labor costs went down, so they were down 0.9%. Is that how you want to see this economy improve and inflation get stronger, or is there another way? Because right now it's not the worker that is getting the benefit of the better economy. You keep touting the 3.2% GDP figures, the great growth, but it's not flowing down to the worker.
Well, let me say this, that, if you look at the wage data, I mean, I just disagree with you. The wage data is very strong. We're seeing, in terms of real terms, the highest real wage gains for middle-class workers in 15 years. So it's been a spectacular improvement for workers. We're seeing the average worker save about $2,500 to $3,000 a year in terms of their taxes and increase in take-home pay. So by the way, there's a great article in the Wall Street Journal I'd refer you to. I think it was about 3 weeks ago that found that the biggest wage gains in the last year have actually gone to the lowest income workers. And that's because, look, it's not just productivity, it's also we've created a tighter labor market, right? It's a very tight labor market right now, and that gives workers a lot of, advantage in terms of, bargaining up their wages. We saw what happened with Target and many other major retail employers that are having to pay higher wages. So, look, it's a great time to be an American worker. This is the best labor market for workers in your and my lifetime.
Yeah. Stephen Moore, if this doesn't work out, you can forget about Club for Growth. I really want you to set up Club for Deficits. We've got a twin deficits that's expanding. We're talking about a $2 trillion infrastructure package that nobody has a clue how we're going to pay for. Your core theory is we can grow our way to prosperity. Can you do that with a twin deficit that we saw with Ronald Reagan? We're going to get there in what? 3 months, 3 years, who cares? Can you do this with the deficits that we're carrying on our back?
Well, look, you're not going to find anybody in Washington who wants to cut government spending more than I do. I mean, I want to cut. My record for 35 years has, hundreds of obsolete, bankrupt, inefficient agencies should be cut. We should be looking at $150 billion a year of erroneous payments from Medicare, food stamps, Medicaid. That's $150 billion a year we could save. But look, I'm a growth hawk more than anything else. I do believe if we can keep this 3 to 4% growth path up.
Okay, but every one
percentage point of growth.
Domestic final sales last quarter was flat on its back. I get the idea. There's a domestic economy and all the external news that's out there, net exports, inventory build. The fact is we're running a 2% under economy. Michael Feroli at J.P. Morgan has a terminal run rate under 2%. How are you and the president going to goose the terminal growth rate of the country back up above 2%?
Well, look, we're at 3. With the last 6 quarters, we've been at 3. So I don't know what the J.P. Morgan people are talking about. I mean, they're completely. I mean, I just think they're wrong. I mean, the fact is, the economy has dramatically shifted upward. We've increased the supply of goods and services. We got great wage data. We got full employment. We have 7 million, more jobs than people to fill them. I mean, find anything in this picture on the economy that you can complain about. I just love the picture. I want to keep it going. I'm with the 71% of Americans who feel the American economy is good or great. By the way, there was another number that just came out this morning showing Americans feel really good about where the economy is at. And I just want to make sure this lasts 5 or 10 years.
Mr. Moore, I'm going to quote from a Bloomberg article that was written this morning. Central banking as we know it is on the way out, and it's inevitable that something like modern monetary theory will replace it. That is the view of Ray Dalio, the billionaire investor. Do you agree with him?
Modern monetary theory? Is
Yep.
that what you're saying? So this is the view that we can just print money and create growth. I mean, I think of all the ideas I've ever heard in my lifetime, that's one of the stupidest. I mean, if you could create growth by printing money, then Zimbabwe and Argentina and Venezuela would be the richest countries in the world. Look, we want a stable price system. We want lower taxes. We want free trade. We want less regulation. We want to unhinder our businesses so they can grow and employ more people. That's what we're doing. But my goodness, can you imagine the idea that we just keep printing money and somehow that's going to create growth? If the fact that people are actually taking that serious is disturbing to me.